Dipan Mehta joining in. He's founder director at Elixir Equities. Dipan, we always love having you on the show. Thank you so much for coming in. I would say you're one of the first few people who called the change in trend when things were really looking down and out. And I remember our conversation on this show itself. Do you see this now gathering momentum?
Good morning, Tamanna, and thank you for having me on your show. It's really a privilege, and I also enjoy coming on it. And thank you for remembering the right calls and ignoring the wrong ones. But no, I think that certainly the sentiment has improved because of cessation of violence in West Asia. And at the same time, the more important factor which I'm dealing with is twofold. One is 9th of July, which is when the 90-day pause ends for the kind of Trump tariffs which have been put on hold. What is going to happen after that? Is there an extension? Will the tariffs come back big time? So that's one big question, and I don't think that the markets can, really zoom up unless we have some certainty over there. Secondly, I think that the stage at which the market is just now considering the valuations.
Sorry, Dipan, but not to interrupt, just talking about July 9th, since you mentioned that front and center, what we heard from Carolyn Levitt, the White House spokesperson, then we played that out this morning where she says July 8th, 9th, we're not really hung up on it as a deadline. Then Trump comes and says that, we're anyway talking to people, we're going to sign a big deal with India. That doesn't comfort you on that one front?
See, it's so unpredictable, no, Tamanna, that anything can happen, and every time President Trump says something, he still does tend to stir up the market and impact the sentiment. So let's have some certainty over there. And second aspect is, the valuations are pretty reasonable, again, getting into the more expensive side. And unless we are supported by very strong corporate earnings, I think that the markets cannot scale significantly to newer highs. It can stay around these levels, have more sideways movement. But for a 8 to 10% type of a move for the Nifty, you need solid growth in earnings, maybe June quarter, maybe September quarter, more positive management commentary for the stock prices to move to the next level. So these are the two, I would say, impediments to another phase of the bull market starting. And let's see how it plays out. It's anybody's guess. Otherwise, you'll have more of this sideways movement unless we have clarity on these two fronts.
Yeah, Dipan, hi, morning. Seeing is believing, I guess, and the only limited point that I'm making is notwithstanding global uncertainty, I'm just wondering whether the push on the monetary policy side will have a bearing on earnings heading into the second half, and also you'll have the low base of last year. So if at all, are you looking at revising perhaps in some pockets, not across the board, but in some pockets, your earnings estimates for this year?
No, certainly you're right. I think it's not just the RBI interest rate cut of 0.5%, which is very welcome and significant, but also the income tax cut on the personal taxation front. That also is going to benefit consumption, and overall monsoon also has been positive. The cycle has been down, so that should revive. So I think apart from technology across the board, we should see an earnings improvement, and that should have been visible. But then the question I ask myself is that why are corporate advance taxes so low? So are we to brace ourselves for a weak or slightly stagnant June quarter? That's the question which comes to my mind. So sure, I think that September, this particular busy season, the festive season should be good. Base effect also will benefit. But look, the way the prices are at these levels, the way the valuations are, unless we don't have solid proof that, look, the earnings have gone into a higher trajectory, I wouldn't feel comfortable bidding or buying at these prices.
Okay, yeah, and that concern is well noted, Dipan. In fact, as we saw the VAHAAN data and thought about the June auto sales as well, those look fairly fickle too. So there are contrasting forces at play here. Therefore, Dipan, am I to understand that if you see a promising story right now, you would rather wait for some lower levels to buy in, or if the story is promising enough, you're putting in the money right now? And what could those themes be, for example?
No, Neeraj, I think that, from a strategic asset allocation point of view, I don't think investors and we are increasing our exposure to equity. But look, if a great idea comes along, then you're not going to wait for market levels. Typically, investors like us look at 3, 5 year, 10 year also type of investment horizon. And if a good idea is coming through over there, then it doesn't matter where the markets are, and if there's a 10% correction in the stock price or the equity overall indices, is not going to really affect us because our view is quite long term. Coming specifically to where we see the pockets of growth, so I mean, generally, I think we're very positive on the capex theme, and these power distribution equipment companies are looking very interesting. Transmission tower companies, smart metering companies, we all know the names. So there's Transrail, which looks very interesting, a good risk return profile. But of course, they have a problem on the Bangladesh orders, which they have. Within the same space, very impressed with Kalpataru's order wins, 3-year type of earning visibility. Dark horse, could be the smart metering company, but let's see how that plays out as well. And then there are within the power space, we like the wind energy producers, both Suzlon and Inox Wind. Excellent visibility as far as the order book is concerned, expanding capacities, and very little threat from imports, which is the case with solar panel or solar equipment manufacturers. So that's one entire capex theme which looks pretty strong. I would say better on a risk return basis compared to railways and defense. Then, of course, there are the consumption plays. I think that Indigo certainly needs a mention over here. I know the sentiment in aviation is slightly down, but look, it's increasing, it's gaining market share, and I think valuations are reasonable. Lower oil prices, higher demand, and overseas expansion should lead to solid earnings growth over the next 3 to 5 years or so. That's a top pick in the travel tourism space. And like that, I think sector by sector, there are certain ideas which are emerging. It's not that they're really cheap, but when prices come down, you could look at them.
Okay. News coming in, confirmation of reports from a while. AkzoNobel has finally inked its share purchase pact with JSW Paints. Now, AkzoNobel was being courted hard and long by various paint companies in the fray. JSW Paints has made it to the altar. Founders will be selling 50% plus of their stake, and JSW Paints will acquire the sole control of the company. Let me just pull up that AkzoNobel stock and see if anything is happening over there, some movement. But anyway, you've ended the pre-open session, so we'll look at what happens when markets open.
At some point of time in the next 5 minutes, we'll also try and get you comparisons of what this deal would mean relative to some of the past deals that have been done in the paint space. Remember, the paint space has actually seen entries of people, right? And not as many consolidation deals. So in some sense, you could argue that this is the first of the large consolidation moves that was happening in the paint sector. You have an Asian Paints, which is the bellwether. You have Grasim, which has entered this sector with a lot of muscle power and a balance sheet heft behind it, and have put that to work. Berger has gained market share as the year went to a close. And now you have JSW Paints, which was largely, guys, factoring in B2B, now making a point that we are going out and buying an AkzoNobel, presumably not just for B2B.
No, so the JSW Paints press release is out. So let me just go through the details very quickly. They've entered into a definitive agreement to acquire up to 74.76% stake in AkzoNobel and its affiliates, maximum consideration of up to 8,986 crore rupees. So we now have that figure in, of course, subject to approval from CCI, etc. So that's the big one coming in. And it really places, I think, JSW Paints in the number 4 category, if not number 4 or number 3. Mahima joining in for more on that. She's been tracking that story as well. But here now we know the number of the acquisition, a little shy of the 9,000 crore rupees, which was reported this morning by various newspapers. So it's 8,986 crore rupees, which is the number. And the stake which will be acquired is up to a 74.76% stake by JSW Paints. Let me go across to Mahima, who has more details. So Mahima, just give us the context of this and why this is so significant, because we've been seeing different kind of a consolidation in the paint space.
Absolutely, and as you rightly mentioned, the deal is just slightly away from what the media reports were suggesting. Now, as everybody knows, JSW is set to acquire AkzoNobel, and this is promoters that are selling their entire stake. 2 promoters in the company are selling their entire stake. Imperial Chemical Industries, that is holding around 50.46%, is selling its entire stake, and AkzoNobel Coatings International BV, holding 24.3%, will also sell its entire stake. So this will also trigger an open offer going forward. Now, just to give viewers a perspective of the timeline as to how these things have panned out for AkzoNobel. February 2025, there was Blackstone which joined the race to acquire AkzoNobel. A month ago, JSW Paints was in conversation to acquire the Deluxe brand, and that has now fruitified. In Jan 25, Pidilite, JSW as well as Berger and Indigo Paints did submit their bids to acquire AkzoNobel. In Jan 25 also, AkzoNobel NV Holding company was considering the sale of its coating business unit, and this was also setting off their overall international R&D operations to their indirect arm, and also exploring acquisition for their decorative paints as well. In October 24, Asian Paints CEO also said that they were open to acquiring AkzoNobel if that aligns with their business, and April 24 again was the first time when JSW actually put in bid to acquire AkzoNobel. Management also came to NDTV Profit and had said that they will evaluate acquiring AkzoNobel depending on what options the management get, and this will be considering the best option that they get from all the paint players that have bidded for acquiring AkzoNobel. So this is the overall timeline as to how this entire saga of acquisition for AkzoNobel has taken place.
Okay.
Just before we go to Dipan, I think two things out here. One, it's happening at a slightly lower price than the current market price, but I reckon this should be construed positively for AkzoNobel shareholders because a large and an aggressive company will come to the fore. I also reckon it could be negative for some of the other paint companies.
Yes.
Because now there are 4 large players entrenched here.
Exactly the question that I want to take to Dipan. Good for Akzo? Is it good for Akzo shareholders looking at what the share price is coming in at? Lower than the current market price 16%, perhaps?
Yeah,
16% lower. And what does it mean for the incumbent players?
Well, I think it's a very good deal for JSW. And I was just calculating while you were speaking that the PE multiple at which JSW Group has acquired is sub 30. It's about 29 times or so, which is very attractive for a business which has a 30% type of a ROE. Now, if you let your imagination loose a little bit, you can expect that JSW Paint in a business can get merged into AkzoNobel. So that would make the size and the scale really massive. And that certainly adds heft to their operations. And from JSW Paint's point of view, I think they get very strong brands which they can invest in terms of advertising, sales, marketing, distribution, and grow that business. We know the JSW Group is very aggressive, and that aggression certainly will come into the paint business as well. So I think it's a win-win situation. And as an AkzoNobel shareholder, there's no question of tendering the stock back to the...
Exactly.
You just invested, and maybe at these levels, if you have a really long-term view and you can anticipate that the consolidation in paint industry will be over with one day, you could look at buying stock.
You pointed out the valuations that the deal has been struck at good for JSW. Are you surprised at the reaction? One, it's down about, 0.75% or so. And two, what are the implications for the rest of the players, the entrenched players in the paint space?
No, I think that the entrenched players in the paint space, they'll take it in their stride because like what happened in telecom will eventually happen in paint industry as well. And, water will find its level. And at some point of time, competitive intensity will go down and we will see more sensible pricing and discipline in terms of business. So eventually earnings will start to move up. The problem in the paint industry just now is the demand also is on the lower side. And once you have demand coming in, maybe hopefully this festive season, you may certainly see improvement in the sector as a whole. And I think that, let's just not go very deep into why today's stock price is down or up or flat. Some amount of traders who have bought because of an expectation of a higher open offer price may be liquidating. There are no real reasons why the stock hasn't moved up. But from a long-term investor perspective, I think it's a good development.
Okay, so Birla Opus versus Asian Paints versus Berger, that competition certainly heating up. I want to look at what JSW Holdings is also doing this morning, even as this news comes in, because frankly, it's a sweet deal at that end. A slight, dip over there as well, maybe because of the valuation coming in. My question to you, Dipan, is now looking at all of the players, and let's talk specifically about Asian Paints. Asian Paints, the undisputed king for a very long time, and then competition just shoring up. Asian Paints completely flat today, but if you were to bet on a possible winner in this race, would Asian Paints make the cut? Would you buy an Asian Paints today?
No, see, Tamanna, don't get me wrong. I'm not looking at paint industry in extremely positive light at this point of time. All I'm saying that it is positive for AkzoNobel shareholders I'm not looking at buying into any paint company, but as an existing investor, the time to sell is gone because of a correction which has taken place in the stock price. When you take a slightly longer term view, 3 to 5 years or so, and the consolidation as and when it takes place would see a revival in the fortunes of the entire industry, maybe 2, 3 years down the line. And that's what investors need to look out for. And a more important matrix or more important variable to track is what happens to the demand in the paint industry. Does it start to look up from this festive season onwards? So these are things that I'm like, these are the thoughts that come to my mind. It's not that, because of this development, I'm looking at buying any of the stocks, or increasing my holdings in any of these companies as a measure of disclosure.
Yeah, just, since we're talking about paints, Dipan, one more question I'll ask you is about real estate. So much news, social media chatter about how, the real estate space is a bit of a pack of cards, just allied, right? So, which is why the question, are you seeing some strength in real estate at all? How are you feeling about that entire pack?
See, I think real estate is on a very strong multi-year upcycle. But I've seen in the past that even in such a multi-year upcycle, there are periods of lull, where there are periods where there's a minor down cycle as well, and I'm waiting for that. Till now, also, we are seeing that company after company is reporting very strong booking, and they are launching new project after project. But gradually, the inventory, unsold inventory, is inching up, it's growing. And I suspect that at some point of time, some amount of headwinds will come for the industry. And I'm waiting for that correction, that's a sort of souring of sentiment before looking at investing in these companies. There are great long-term stories. There's a great deal of discipline in the way the managements are managing the real estate business. It's a sea change from what was 10, 15 years ago. And truly they are creating value. But just that I want to reach that sweet spot, which may come when you see a slight lull in sales, some negative news, that may impact a short-term movement in stock prices, and that may be a good entry point. Right now, it's like a moving train going at 60, 70 kilometers an hour. Doesn't make sense to put your hand in it.
Okay, moving train, 60, 70 kilometers. I suppose that's very slow with the bullet train. What's the perspective over here, Dipan? In some context, 60, 70 is not bad.
Well, in Bombay roads, it's great, no?
That's why I'm asking you. If you're comparing it to bullet train, then it's a different story.